Hey folks, today the question we're looking at is, why should you own life insurance? I'm Rob Tatro from robtatro.com, head of the Tatro Wealth Advisor Group here at Canaccord Genuity Wealth Management. Brings me great joy today to be chatting with you with none other than our senior wealth and estate planner, Mr. Adam Buss. He's a beauty. He's going to join us today. We're going to talk about life insurance. Before we get to that, please take a sec, give us a follow. Also, if you have questions on this, make sure to go to speaktorob.com. You can ask, you can book a consultation with us there. We'd love to hear from you. We'd love to hear your questions. So life insurance, Adam. First of all, tell me about the different types of life insurance that exist. And then obviously the question today is, why should you own life insurance?
Well, there's two major types of insurance that we'll kind of cover. There is term insurance and there is permanent insurance. There's a variety of different contracts under each of those. Term insurance generally is meant for those who want to replace their income, make sure that their surviving spouse is taken care of, their family's taken care of, their debts paid off if they pass away. And then there is permanent insurance. Permanent insurance is designed for a long-term need, leaving money for your estate, your beneficiaries, charitable donations, covering a large tax bill such as a family cottage as an example. Those are a few of the different types of things we often see.
Okay, so now why should I or why should you have life insurance?
Why not is probably the better question. But it's probably the most selfless thing you can purchase in your lifetime is to make sure that your family's taken care of in the event that you pass away. Let's say, Rob, you had an ATM in your house that spit out $60,000 a year. Would you put insurance on it?
Absolutely.
Who wouldn't want to put insurance? You are that ATM. You are the one that has that earning power every year, whether it's $40, $50, $60, $100,000 a year of salary. If you were to pass away prematurely, that disappears. So who wouldn't want to make sure that would kind of continue to make sure that your family's taken care of financially?
Now, what about someone who says that, you know what, I'm just going to save that money and I'm just going to kind of self-insure or something like that? Why would you not want to do that?
Well, yeah, some people, may have a large amount of wealth and be self-insured, but, do they want to transfer that wealth to their family? Or do they want to have to spend it all just to afford to put food on the table and have nothing left for their family long term to accomplish their goals?
Okay, so let's start with the term insurance. So the term insurance, as I understand, is effectively renting coverage, right?
Precisely, yeah.
So who would that typically be suited for?
That would be suited for, again, anybody who's looking to replace their income, cover a shorter term need. You are renting the coverage, therefore it is cheaper than owning it long term. It is fairly affordable, a great way to protect your family, cover your debt in a very affordable manner.
Okay, and then the permanent coverage, there's a few different types of that as well.
There is a few different types. There's a universal life, a participating life. The idea is it's a whole life, meaning it's around for your entire life. It is guaranteed to pay out at some point in time, hopefully many years down the road, but it is there to ensure that the long-term needs are there as a protection. I like to consider it a part of your investment component. It is a piece of the puzzle, so you're investing in that long-term growth of that policy.
And we do that here. We do that. It is part of the complete holistic investment picture. And if you're not sure about that, please don't hesitate to go to speaktorob.com and to book a consultation. So let's get back to this. The whole life, and so that pays when I die, correct?
Correct.
Does it also pay if my wife dies before?
It depends on how you structure the policy. You can have one just on your life. You can have a joint one with your spouse. Often for estate planning purposes, we're going to set it up as a joint last to die policy.
Okay.
So both husband and wife are insured on one policy, and it pays out when the second person passes away.
What about a joint first to die policy? When would you be using that?
Those are often used on making sure that either surviving spouse is looked after financially, there's money to pay off debt. Those are often things that we kind of see that when the first person passes away, that those needs are looked after.
Okay. And the joint first to die or joint last to die, which one would be more expensive than of the two?
First to die would be more expensive.
Okay.
Yeah.
All right. So now we're insured. We're protected until we die. Now, the permanent insurance, you talked about leaving kind of a scenario. We talked earlier about cottages and stuff. Give me an example of how insurance could be potentially used to protect a cottage or to make sure that a cottage can stay in the family.
Sure, yeah, great question. So often cottages, have a large capital gain at the time when the second person passes away. So let's say, you bought it for $100,000, 20 years ago, and 30 years from now it's going to be worth $500,000. That's a $400,000 gain in value that the government is going to want their share of tax on. So do you want to leave your kids a financial burden by having to either get a mortgage on that property just to pay the tax bill, or having to sell the property just to pay the tax bill? Often a cheaper way, a more affordable way, is to use a permanent life insurance policy to pay out to the estate, to pay that tax bill. That way the family cottage and all the memories that go with it can stay in the family.
Because otherwise, if mom and dad pass away and the cottage goes to perhaps a younger child, might not have the net worth to be able to pay the tax bill, because the tax bill is payable. Whether or not the cottage is sold or not, the tax bill is payable because it is a deemed disposition. And I mean, whether or not they want to maybe put a mortgage on it, maybe they can't get a mortgage on it, all of a sudden now you're left with a situation where you got to sell the cottage because you can't pay for it.
That's right.
Now, what about individuals who've built up assets and value through real estate?
So it would be a similar concept. So we do come across a lot of clients that have a large rental portfolio. They bought them at a great deal. They've grown in value over time. And now there's a very large capital gain at the time of death.
Because the real estate depreciates.
Because the real estate, has also grown in value, and they've maybe depreciated along the way to help offset some of their income tax on an annual basis. So those are all things that we want to look at and kind of come up with a solution, which is often life insurance as a way to create the liquidity for the estate instead of having to go and sell the entire rental portfolio or have to go and get additional unnecessary debt on that.
Okay, so the one you rent, term insurance, the one you own permanently, permanent insurance, whole life, etc. So a lot of times this will be used in tax planning, if I understand correctly, right?
Yeah, often one of the most overlooked but most valuable tax tools is using a whole life insurance policy as a tax strategy. Those policies grow tax exempt behind the scenes. So it's a great another place to park money, surplus non-registered money, use it as a strategy within the corporation, which is a much bigger topic. But those are things that we work with our clients on a daily basis, coming up with the right strategies to put in place to save them the most tax.
So it's not just to protect the risk of you or I dying. It's not just to pay a tax bill potentially on death. It's not just to make sure the cottage stays in the family. It can also be used as a tax planning tool.
Exactly. It is absolutely a tax tool as well.
Okay. Adam, real great to chat with you. We appreciate the time today talking about life insurance and why you should have life insurance. Again, I'm Rob Tatro from robtatro.com, head of the Tatro Wealth Advisor Group. We sat here today with Adam Buss, Senior Wealth and Estate Planner here at Canaccord Genuity. Thrilled to have you. Please take a moment, give us a like, give us a share, give us a follow. We'd love to hear your comments. And if you do have further questions on this aspect or anything planning, please go to speaktorob.com. We would love to hear from you. Thanks for tuning in. Have a great day.